Can we just get one quiet week in markets, please? I was very hopeful that this would be a week where we could just digest everything that has happened over the last couple months, and then some Yahoo has to go and lob things over the fence at their neighbors. Yes, we have to speak in code here in YouTube. But if we look at past Middle East conflicts, market corrections for these kinds of events tend to be short-lived. And we saw that exact sentiment this morning with a strong bounce to start the day on Friday, and then a sell-off going into the weekend, which is signaling just funds wanting to be a bit risk-off going into the two-day weekend, not knowing what might transpire or if things might escalate. But that aside, the week overall wasn't too bad. We had positive CPI and PPI numbers, and there was also progress made towards a trade deal with China. In the cryptoverse, Bitcoin Treasury stacking is accelerating, Solana ETFs are getting closer than ever to approval, and Fartcoin just got added to Coinbase. They are going to screw up my favorite perp trading vehicle by making it mainstream. God damn it. Anyway, with all this happening, markets are fairly neutral for the week, just down slightly at the close. So are we going to keep marching towards all-time highs, or was Thursday's Gray Swan event enough to derail us onto more of a corrective path? We're going to take a detailed look at the charts to determine just that for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a great week. It should be a better show today. I'm all rested up after the move, and I've really been enjoying my time here in the void. It's so quiet. For those of you who don't know, that's a Stranger Things reference. Anyway, before we dive in, if you do find value in the content, if you could like, comment, or subscribe below, that would mean a lot to me personally, and it really does help this get out there to more people. Today, I'm going to take a deep dive into the charts, and I'm going to focus on a few less names overall, so we can really spend a bit more time getting into the detail on the charts that matter most right now. And because of your request, I'm also going to cover ETH. Don't love it, but it did attempt a breakout, so I'll cover it for you guys, because I love you. Anyway, and I'm going to go into all the Bitcoin Treasury plays as well because there was a request on those. So let's get right into it. I'm going to start on the S&P 500. All right, here we are on the S&P 500 chart, and this is take two, as they say in the music business. If you saw my post on YouTube or on X, unfortunately, I was editing all this last night, and the files in the background were uploading to Dropbox or syncing to Dropbox and got corrupted by the editing I was doing like 10 minutes away from finishing, and despite my best efforts to recover them, no luck. So here we are recording again, but I think it's actually good news for the crypto charts because there have been some developments and I can give you a bit more detail on those. It was a very detailed video yesterday. I spent over an hour going through the charts in detail as we discussed on Monday. I do have some commitments coming up today, so I'm going to have to go through things a little bit more quickly, but I'll make sure to cover off on all the high-level important details. So starting here on the S&P 500, and you can see this red box here just corresponds to our previous all-time high range and this consolidation zone that is providing our primary resistance. You can see we're also into the point of control on the VRVP, which is the most traded zone, and we are also into this outer cloud on the IADSS confluence model. So we have two instances of the cloud set up. If you ever have questions about how I have any of these tools set up, go to the trading education playlist on my channel, and I have set up videos there. Anyway, so we saw 3 daily closes above that 6,000 level. So that was a good sign of strength. And then on the Israel-Iran conflict, we pulled back a little bit. You can see we are overheated on the daily RSI and on mean reversion, but that can stay elevated for quite some time. So we are moving into a decision point. There's also this underside trend line, which isn't a totally valid trend line. You need 3 touch points for it to be valid, but I'm just speculating off these 2 points and seeing what we're going to do on this third touch point here if we get a bounce away on Monday or if we break through. The things that could lead to that decision point is we have FOMC on Wednesday with the rate decision, and that is projected to stay at 4.5%, but that is most likely going to move markets, particularly if they start talking about rate hikes, which relates to our conflict in the Middle East and oil prices going up because of that. Higher oil prices lead to higher inflation, lead to an increased chance of rate hikes, which the market doesn't like, the current administration doesn't like, so they're not going to want to see that happen, and they're going to want to see a resolution in the Middle East quickly. resolution in the Middle East could lead to us bouncing away. So if we're just projecting out our paths, do we bounce away into new all-time highs? And then do we consolidate up here to cool off the charts? That would be an amazing sign of strength and back test this range now for support that used to be resistance. Or do we break through and do we chop around here, maybe test some of these lower supports and then break away sometime in the future? That's what we have to keep our eyes on. If we do look at the smaller time frame charts, you can see how the 4-hour has also been elevated but is resetting a bit to neutral, and the 1-hour is fairly reset overall and has room to run. So on the smaller time frames, we definitely have room to move, but I'm mostly keeping my eye on the daily. If we go over to the NASDAQ, it is a very similar chart. We have that same underside support. The NASDAQ has been stronger, so tech names, recovering more quickly than the S&P 500, but we're also overextended on mean reversion and the daily RSI. And you can see on this one, we actually broke above this cloud here on the double cloud setup on IADSS, and we are much closer to our all-time highs. But when we broke down Thursday evening into Friday, we broke below this trend line, and now we are underneath that cloud as well, which could provide resistance. In terms of the overall market reaction, this holds true for the S&P 500 too, but I'll just mention it here on the NASDAQ. We opened substantially lower, and then we rallied into the start of the day. So that was the market essentially shaking off some of the Middle East conflict, but then it sold off into the end of the day, which is totally normal for events like this that are still unfolding. And going into the weekend, it's uncertain if things will escalate or what's going to happen. So it's just bigger funds and other players in the market de-risking. And we really need to see how things react next week to get more of a read on how the market feels about all this. Now, these are our critical weekly closes for the broader indices. As we get into the crypto charts, we need to be watching Sunday evening for the weekly candle close, as that is the primary indicator for those longer term charts. Okay, moving over to the dollar, and we're just on the weekly here. The notable thing on the dollar is, after our bear market 2022 breakdown on the dollar, all this consolidation and one last hurrah before really breaking down in a macro sense, we had a new low set this week with a bounce up to close the week. So if we go into the daily time frame, you can see that new low set, and then with that conflict arising between Israel and Iran, that pushed the dollar back up temporarily, and we closed kind of middle of the range on that daily candle. So this is a notable breakdown as we're setting a lower low here, and we anticipate the dollar dropping more from here. If we go back to the weekly in terms of anticipating support, I'm looking at that 96.30 range because of this previous consolidation here, and also that level where I have this line drawn. It's not an exact number, but it generally provided support on this last run up. And we have a bit of open space between where we are to there. So look for that 96.3, 96.4 to start playing support on the US dollar. Okay, the big story of last week, though, was oil. You can see we're again on the weekly chart, and for years and years, we had this support zone marked out in red here, and we've been breaking down from that, tested it for resistance now, broke down, and then we've had the last 5 weeks this massive bounce away. And just this week alone, that was roughly 20% on the week. And you can see from the bottom, if we take it all the way from the bottom, I think it was like a 40% bounce on oil. Oh yeah, 39.2% bounce on oil. So if we go into the daily, we did definitely hit that peak right there and then pull back on Friday. If we zoom out just a little bit more, that peak that we ran into also coincides with the point of control on the VRVP, this previous resistance line we had drawn at 77, also the outside of the cloud on IADSS. So that to me is signaling a turnaround point in oil. Granted, this is geopolitically driven, but we also had a massive volume candle, which we know tends to lead to turnarounds, and we retraced about 50% of that price move on Friday. Not quite 50%, but close enough. So I would anticipate, given the desires of this current administration to see lower oil prices, combined with what the charts are telling us, that we are going to see some resolution that is going to bring this back down to earth in the next couple of weeks. Okay, and last on the list for commodities that are impacted by all these tensions would be gold, which actually broke out 3 days ago. So that broke out already on Wednesday and has had a rally up. And obviously we spiked on the conflict news, but we couldn't break above really in a meaningful way. We had a little wick, but we couldn't really meaningfully break above this 3,400 level. Now, from way back when, if you go back in the videos, you know we were targeting perhaps even as high as 3,600 as an ultimate target for gold. But after this blow off top and this consolidation, I anticipate we aren't going to break the top of this range. And if things settle down, as we anticipate they will, that we will continue to chop around and consolidate for a bit longer on gold until it breaks out for its next move. But the move we had seen on gold wasn't sustainable. Now, silver, on the other hand, which we know plays catch up to gold, it moves after gold, broke out into new all-time highs. So we had our previous all-time high, and we broke that about a week ago, a little more, and I entered a position on a long leveraged ETF. That has moved away nicely and is just consolidating. And on silver, I'm anticipating the move to continue, and I'm targeting for a near-term target, that $40, and then eventually way up to $45. So what I could see happening is a move, some consolidation, and then trying to hit that higher target. Okay, moving on to the fun stuff, which is Bitcoin. And I'm going to stick a little bit more to the small time frame so we can determine what is happening with our move. And see, we have a lot of things going on the chart here. But just to recap our recent thesis, so we had this 6 weeks into a 7th week up that broke down from this uptrend. And for a balance correction, we were saying we would need at least a 2-week time frame from the top to the bottom. And we were scouting this last Thursday on the Elon and Trump conflict as a potential turnaround point that aligned nicely with that time projection from the all-time high to that date right there. That's 14 days getting into the 15th day, which can be a turnaround. Now, we had this underside support and we had a strong weekly close. So I was originally considering this move down potential deviation, and I was ignoring it a bit. But the thing we still have in play is this potential head and shoulders pattern off the top, which isn't the prettiest head and shoulders, but when it broke down, if you measure out this center line and you project that from the breakdown here, that got us to 93,700 roughly. Again, I'm just drawing this out quickly right now, which is right at the 50% support of this broader range. The 200-day moving average, we know 98K is a great support, and 93K, 92.5, 93K is another great support. So the target really made a lot of sense, and it would be the furthest I would want to see a correction go to keep this structure of these previous lows alive and not break down from there, right? As we bounced away, I thought, hey, maybe this was just news-driven deviation because we had another support test of this line right here, and then we continued to break away, but we couldn't really gather enough steam to break into new all-time highs right now, and now we drop back down. So there's a key level we have to watch right here at 106,200 to 300, which equates to the 50% of this entire range. So from our all-time high price to this last correction bottom, that's our 50% level right there. And wouldn't you know it, on this little bounce correction, that's exactly where we rejected from. And you know, obviously this drop was on the whole Israel-Iran thing, and then crypto started to bounce away. And this weekend, as things accelerated, so this was yesterday evening and things were heating up, then the price continued to sell off. And hopefully we're finding some local support here at around 104,400. And I would really love to see a weekly close above this 50% level. That would make me more confident that we're just setting a higher low and that we're continuing to bounce away and mount strength for the break into all-time highs. If we close below that level, I'm then looking out down below to that $98,000 level, which also corresponds with our fib level here as the next area of support. Of course, we also have the psychological 100,000 number, which is close to these lows right here. And I would hope that that 98K can prove support and we could bounce away from there. If we're going back to our time analysis, so this 2 weeks could still be in play because we haven't broken this low. But if we are anticipating a bit more chop to set our ultimate low, we know that the market moves in cycles of 30, 60, 90 days. Those are also divisible where we get that 2-week time frame from. So if we draw out from our all-time high 30 days, that puts us at the 21st of June, so next Saturday, to look for a potential low or turnaround point in the market. And that happens to also coincide with solstice, which is on Friday the 20th. So if you follow Gann analysis as well as swing analysis and all the timing and cycle analysis he did, he also talks about seasonal dates and how those can often mark turning points in the market. So something to look out for here on Bitcoin. If we're getting a little bit more nuanced with our fib levels, and just a quick recap on fib levels, you are always looking for major swings. So I would consider this one major swing in the market, this another major swing in the market, this another major swing, and now we have another major swing, and we need to see where this resolves. If it bounces away, our swing direction would be like that. If this continues to form new lows, then we would connect our swing to wherever those lows are. But if we're just drawing out this last swing here, which we know has confirmed to anticipate some potential support stepping into the market, you can see that we had that next 50% level for that zone. Let me just make it a little bigger. Right here at 105,500. And then we are getting into the 38.2 right here for potential support. And I'm scouting a potential bounce right now at this support line to see if we can set a higher low and we can move away from here. If we bring up our RSI and our mean reversion, you can see that on the 4-hour here, we are completely reset to the bottom of the chart. We don't often get these big resets except for this Pico bottom here, this one right here, and then price action normally moves away. And if we go down through the time frames, obviously the 1 hour was way oversold there as well. And often we come back for another little retest of the lows, but all these time frames aligning with the oversold signals when we had a more extreme bottom here and we're setting a higher low potentially is telling me that we should see a turnaround, but obviously there's some uncertainty right now into the weekend. So let's see what this can do on Sunday afternoon and if we can close above that 106,300 for round numbers. If we go into Solana in contrast, you can see that on the daily here, our RSI has been in a downtrend and we broke out from that. And now we're back testing it for support. You may say, well, Tom, this candle looks like it's breaking down. Well, we have to wait for that to close in about 6-7 hours from now, from the time of recording. And this could still move back up if we bounce. And I'm hopeful for a bounce where we are right now, because this level right here at the 141.50 is the 50% of our overall range. And you can see how we found support, support, support. And now we came down. This is weaker than Bitcoin on Solana because here was our Trump Elon low, and now here is our Middle East low, whereas for Bitcoin, that was at a much higher price. But the good thing is our RSI right here on this past low last week only got to the level our daily RSI was at the very bottom of the correction when we were at $95. So that's telling me that there's more strength in the chart right now at this level. Since we reset to that point and bounced away, we're obviously still below our major 50% at $195. So there is more work to do. But if we go into the 4-hour time frame, you can see how this pullback got us from the top of the RSI range to the bottom of the RSI range really quickly in a move from $168 to $141. Whereas our last pullback to reset the RSI from similar levels at the top to the lows right here was a pullback all the way from $187 to $151. So you can see percentage-wise, it took more of a move, more time, more price to get us that low last time. And so this is just pointing to the extreme nature of this move. And extreme moves with big volume candles like this generally lead to turnarounds. And I like points like this for higher confidence entries if you're perp trading, because everything aligns. If we go to the 1 hour, the 1 hour is oversold. Obviously, the 30-minute is going to be way oversold, way more high volume here too than it has been in recent history. And that doesn't mean we can't test this level for a double bottom or maybe dip slightly below briefly, but it's a fairly certain entry that things aren't going to get more extreme than this when you see this high volume, even with something like a Middle East conflict moving into the weekend. But you can see how yesterday afternoon, the crypto market started moving away. And then overnight, as things escalated and Iran retaliated against Israel, we've been drifting back down. So it's just a matter of seeing where we find that support. In terms of our weekly close, this level overhead at 152.5 roughly, and this 150.5 support level here, I would love to see it close above this range to help Solana just feel a little bit stronger. So like Bitcoin, keep your eye on this one tomorrow and see if we can get that close. Okay, we're pulling up Ethereum here on the chart because you guys requested. People were saying, oh my gosh, we broke out. This was consolidation. We got above the 200-day moving average. Yes, that is true. And it looks like it's strong. Even if you're taking your fib levels here, many people were saying, hey, our fib levels here, we're breaking above the 50%, and that is very much true. But let's go out to the weekly, and we need to remember that we have not broken all-time highs yet on Ethereum from the previous cycle like we have with Solana and like we have with Bitcoin. So we need to consider our fib levels from the all-time high to the bear market low. And if we do that, you can see that we rejected exactly from that macro 50% level, and you can see how that has played support. During this bull run, it has played a bit of resistance, and it is just something to watch out for. So for me, it still has more proving to do. And then we've got a lot of consolidation to get to between, say, 3,100 to 3,350 right here. Once it can get above that, then we have our range highs of this cycle, which are at 4,100, and then we could test all-time highs. So right now, it is still in the weaker half of the range. This rejection was fairly severe. The one sign of hope right now is that we are into the 38.2 fib level right here on pretty much both timeframes of this local fib retracement range and our macro fib retracement range. So right around here at 2,400, anticipate a fair amount of support for Ethereum, but it still needs to prove itself. The reason that we saw this breakaway is because we had this massive downtrend that it broke out from, but a lot of names broke out from this. If you look at something like Fartcoin, which I'll pull up in a second, it broke away way stronger than Ethereum. And everybody was saying, oh, Ethereum is the strongest player in the market right now. Well, it had a great week this week, but if you're comparing it on a broader time horizon or comparing it to other cryptos, it moved 20%, Fartcoin moved 77%. So it's definitely not the strongest, but it is something to keep your eye on from a fundamental perspective. The technology is still too slow. It's still too expensive. But, if you were catching this as a breakout play, it wasn't bad. Right now, I would just advise caution being into that resistance. And if we can close and hold above that, then maybe it's worth playing for that next leg up. Okay, if we do go to something stronger, which some of you guys have been giving me crap about, but this breakout this last week where Ethereum moved 20%, if you measure Fartcoin on the same time frame, that's 77% move right there. And I've been saying I love playing this just because it respects the TA so well. And what I mean by that is just a few examples here. We had this underside support on the whole move up from early April. And then as soon as that broke, you could draw downtrending resistance on the top. And when that broke out and backtested it for support, that was a perfect entry. And I had a great long position this week. And wouldn't you know it, as soon as we get into this previous support and test it for resistance, yeah, you have a little wake up here, but it rejects away from that. And I also had a lovely short on it this week moving into the whole Middle East news. And I identified that just by a head and shoulders pattern. And a lot of folks say, oh, when these kinds of geopolitical conflicts spring up, TA goes out the window. Well, you had a head and shoulders pattern right here. And if I draw that neckline underneath it, let's just draw it roughly like that. And then we draw from the top of that to our neckline. and we put it on the breakdown point. You could argue that this is the breakdown point here or here since it's downtrending neckline. But anyway, that put your target there at $1.07. We got to $1.0650. So when there's an extreme move like this, yes, you can overshoot targets. And now we're back into support. So I closed this going into the evening on Thursday, and then when I woke up and I saw we had support on this, I played it long again, and then I got out of my long here because, wouldn't you know it, I think that lines up with the 50% level. Oh my gosh, exactly with the 50% level. So when you have a market that is less manipulated, this just plays by the rules much more, and it's very easy to trade. So now I have just been waiting for this to find a bottom. If we're drawing our fib retracement tool just for this local range right here, say we take it from the low, I actually just got into a little long because we are at that 38.2 fib level. We did wick below it, so I'm treading carefully right now, but a lot of our shorter time frame indicators are saying they are a bit oversold. And because we're into that level, and because of how extreme this bottom was, I'm okay taking a chance on that. But if we look just on the 1 hour here, in terms of our mean reversion, our RSI, let me just hide this. If we even go to the 4 hour, you can see how the 4 hour is actually from the Trump Elon bottom is forming a higher low. So we have a bit of support here to anticipate on the 4 hour RSI, but the 1 hour and everything on down got fairly oversold on this little bit of a correction. So that gave me confidence that, we could get back into a move there. And now we are just resetting and we're printing these mean reversion dots. Our RSI on the 30 is to the bottom of the range. Let's see where we are on the 1 hour. We're not quite to the bottom of the range on the 1 hour, but since we're in the midst of a recovery and we didn't get to the top of the range on the 1 hour here, I'm actually okay with that. So anyway, I won't get too into perps, but the point more broadly being that if you can find a chart like this that's moving at great percentages, that's respecting the TA, it's a wonderful vehicle for both perp trading or trading spot. And as silly as the name may be, I know it's a meme coin, but it does allow you to take advantage of what's available in the market right now. As I mentioned in the intro, it did just get added to Coinbase, so there's going to be more action in this market. And I don't know if this very structured and predictable trading will continue, but while it's available, I'm going to continue to try to take advantage of it. All right, we'll just talk about MicroStrategy briefly. It's just been grinding around and consolidating between a bit of support and a bit of resistance at, say, that 360 to the 395 level. And on the daily RSI, it's just been grinding up along this trend line with some small deviations. This chart to me is really just saying it's waiting for Bitcoin to move. I would anticipate with Bitcoin closer to all-time highs that we should be a little bit higher, but Saylor's been tapping the ATM. So the question is, if Bitcoin breaks into all-time highs, is he going to continue to do that while there's hype and he can get interest in those ATM offerings? We'll just have to wait and see. If we're drawing some fib levels just of this recent range here, you can see how we have the 50% overhead, which is adding to that resistance right there. And if we are just drawing it for this smaller local swing, then you can see we are almost into the 61.8 support. We pretty much bounced off of that in this zone right there. So that's why I'm looking at that $360-ish for a support range on MicroStrategy. But our daily RSI, our mean reversion, moving on down the time frames to the 4 hour and on down the line, they're all pretty neutral. So this could move in either direction, and it's got room to run to the upside. If we move on to Tesla, and I'm on the 4 hour chart here, I guess I can go to the daily as well. You can see we had a much stronger bounce away this week because obviously those extreme lows from the Trump Elon tussle, we bounced away very strongly from that. And then we had a little bit of a retrace and a strong day on Friday with a bit of the pullback with the rest of the market going risk off. But overall, this was stronger than MicroStrategy this week because it had more room to run to the upside after this big correction. But if we're just drawing in some levels for ourselves, going off the top to the bottom of this range, you can see how this low right here last Thursday, I was talking about being confident in a long entry because we had the biggest ever daily candle, and we were also getting into this support right here, as well as the RSI on all our smaller time frames being oversold. So that support mixed with this volume candle, mixed with an extreme news-driven event that caused it to break out of the range, all gave me confidence for that entry. If we look at our smaller time frames, the 4-hour, it's got room to run now. It's reset to a fairly neutral level, even after that big bounce. Similar thing with the 1-hour. The 1-hour is kind of to the top of the range, but the mean reversion is definitely in the middle of the range. So Tesla also has room to move. And the only thing I wanted to say in terms of where it closed the week, right here we have a critical level at like 322 that we got above, but that resistance range really goes to like 327. And we closed right below that. I would have loved to see us close really strongly in the $330 range to give me an extra sign of strength in Tesla. So right now we have to wait to see what it can do next week, if it can continue this recovery, but all in all, not a bad looking bounce so far. Now, if we go to the pair trade chart, you can see that things are still moving in the favor of Tesla. And we got really close to a trend flip in the favor of MicroStrategy right here. But then when Tesla bounced away and then retraced a little bit to the end of the day, we kind of ended fairly neutral here on the pair trade chart. But this is definitely one to keep your eye on because our RSI didn't get back above that 60 level in the favor of MicroStrategy. And if I was a betting man, I would say that this is going to continue in the favor of Tesla next week because we broke into the lower cloud. On our double cloud, we have the top, the middle, the bottom. And anytime we break into that lower range, you can see right here, we generally continue that trajectory. If we look here, we break into the lower third of the cloud, we continue that trajectory. Here, same thing, break into the lower third of the cloud and we continue that trajectory. And you can just go back in history and see how this tends to repeat. So I'm eyeing a similar setup right now, and I'm keeping my pair trade favored on the side of Tesla, which would indicate that either Tesla is going to go on more of a run than MicroStrategy, or Tesla is going to stay neutral to move up a little bit, and MicroStrategy is going to have a pullback next week. And thinking back to what we were saying on Bitcoin, is a bit more of a correction possible? Well, this kind of aligns with what the pair trade chart is saying, that if we have a correction on Bitcoin to say that 98K or, Lord forbid, 93K, that MicroStrategy would drop and the pair trade chart would definitely continue in the favor of Tesla over the next couple of weeks. Okay, moving on to the miners, and I'm just going to do this one a bit more quickly, and this is something that you can do at home for yourself, just identifying strength and weakness in miners. And I'm just pulling up the 4 names that I'm playing in. So one is CleanSpark, and we can see that CleanSpark, while it has had a bounce away, is into the 200-day moving average. And the same thing can be said for Mara. Well, Mara is a great value right now considering their Bitcoin holdings and what that relates to in terms of the value of the Bitcoin versus the company value that you're buying right now. No one's arguing that. It's a great value for the stock, but it's also into resistance. But then you look at something like BitDeer, and it is above the 200-day moving average, and it just retests it for support. And I actually added a little bit to my BitDeer position right here on Friday, anticipating a bounce away. And if we're also looking at Iron here, Iron is definitely stronger. Now, if you ever want to compare these names, just like we pull up the pair trade chart for MicroStrategy and Tesla, you can just say, let's go Iron divided by CLSK. And you can see here that CleanSpark was stronger for a bit. Iron was then stronger for a bit. And you can do this for any 2 names, and you can actually pair trade these names even though they're in a similar sector. And one thing that I noticed, what I mentioned on Monday, what I said I noticed rotation from the Bitcoin Treasury plays into miners. And an example of that, let's just go with Riot as a big player in the space, divided by MSTR, or let's do it the other way around. Let's go MSTR divided by RIOT. And here you can see how strength was definitely in MicroStrategy or the Treasury plays more broadly. And now it has flipped into Riot or the Bitcoin miners. And we can do that with another name like Iron that we just had pulled up, and you can see that's even more extreme with Iron. So having a chart like this up, or you can even pull up the Bitcoin miner ETF as kind of an aggregate of the space. But I like just picking 2 standout names like MicroStrategy to represent the treasuries and one of the big miners. That can give you an idea of where money flow is going and where the hype is going. But if we zoom out more broadly, obviously over the last year and a half plus, the strength has definitely been in favor of the Bitcoin Treasury plays. And I'm just noticing this as a bit of a notable flip. And I'm wondering if strength is going to come back into the miners. Let's go out on the weekly here. And you can just see, I mean, obviously with something like MicroStrategy, it has definitely outperformed the miners over time. So looking for these swings and corrections over a few weeks at a time. This is a couple month play, can definitely help you maximize your bags and allocations if you're okay rotating between those names. Okay, we're going to go faster for these next two. I'll cover them in more detail on Monday, but the first one is Hood. And the thing I just wanted to mention on Hood, we had this pullback after the non-S&P 500 inclusion last week that folks were hoping for. And this yellow line just relates to the clip of these past breakouts. If we can't get to our price target of $83 to $85, this would have the target at, by the 17th of June, that would indicate a slower trend than these past couple of breakouts. And normally that fifth wave should not be the shortest and slowest of the waves. We are into a bit of support here. So I'm just keeping my eye on this, noting that there is some strength that has come out of this chart after those news of not being included in the S&P 500, but they still have their crypto event. So it could still run, but just be thrown off slightly. But I may be taking some profits a bit sooner than planned on this. And then on Celsius, we did break our range into new highs for the recovery this week, and we had a 3-day pullback to end the week. That's totally fine. I mean, we're definitely looking like we're going to print a higher low here. And I'm just keeping my eyes on this to see if we can have a more meaningful breakout. And we'll get into more detail on the timeframes on Monday. All right, getting into the Treasury plays, the other fan favorite request. So I have been day trading a lot of these because they've been moving quite a bit. I have been enjoying the 30-minute chart, just looking for oversold conditions on the RSI combined with mean reversion dots. And you can see how those get pretty close to good buying opportunities. And I'm also just using trend lines and fib levels. If I delete this first fib level here, I first got in at $2.75, which you guys have heard me talk about. Where is that? Yeah, somewhere right around here. And as soon as we had these couple tests, I drew this trend line in, and I knew this was initial hype on this being announced as a treasury play. And as soon as this trend line would break, that's just a sign of some momentum coming out of the trade. So when we broke down and then we back tested it for resistance, I got out of my position. That was about a 3x gain right there. And then I was just happy to wait to see when there might be another point for an entry. And I didn't have, obviously, this high for the larger fib retracement levels here, but I was able to draw from that peak down to our breakout, those price bottoms there. And the 50% proved to provide support right here. And I got into a position here at the 50%, and I set a stop order just below. And when we broke down, I got stopped out of that trade. And it's important to have those in play because just this swing right here, what is that? It's like 23%. From the 50%, I think it's 20% on the nose. Yeah, 19. So protected me from that loss. And then I was like, okay, it's in the weaker half of the range. I'm just going to watch this. And then we had a day where it shot away, and I felt like I missed it on this candle right here. But it came back to backtest the 50%. So I got lucky and I got into a position here and I just held it for a bit. And as soon as we got these couple levels here, I drew in the next trend line and I just gave myself the same rule. Short-term trade, just watch that trend line. When it breaks, you get out. Well, unfortunately, this one broke down really quickly without a backtest. So I was only able to get out about right here. But even though I didn't nail the bottom from my entry there to where I got out, that's like a 60-ish% gain. But if I would have held it all the way to the top, oh, that would have been 150%. So much better. And I suppose you could say, well, you could have been looking for, some overbought signals here at the top to get out at a little better point. But I'm watching a lot of things on the charts. Anyway, as this came back down on our larger 50% level, we were finding support and just wicking below it. And so I was identifying some of these lows. So I put my stop just below and I started building a little position thinking we might break out, and I got stopped out again. And we started forming this falling wedge. And when I'm looking at this, trying again for another entry, I'm zooming out to get the VRVP levels here. And from our bigger range, we see that we have the 38.2 level here as potential support, which was aligning with this volume cluster. So I put in my first limit order at $5.45 right here. We broke a little bit below that. And then when we broke out of this falling wedge to the upside, which falling wedges have a higher probability of breaking to the upside, I added a little bit to my position. And then as we got up here, I had my ultimate limit order at the 50%. So just below $7. I set an order to take profits. And as we weren't hitting that, I took 30% off the table and I said, oh, I'm just going to wait to see what this can do. So right now, I didn't take as much off the table as I probably should have. I'm fairly neutral in this position because it's close to my entry point right here, but we seem to be finding a bit of support here at this fib level, and we have open skies overhead to that 50%. So I'm holding this, just anticipating a bounce into that 50%, and that's where I would unload some more of my position. If we can hold above the 50%, and attack all-time highs again, then that would be a different story. But we do have this big volume cluster here to watch out for. So I'm just taking these day by day and trying to take advantage of the opportunities they present while they're still moving in these big percentages. If we go over to CEP on the other hand has been a bit weaker, and I haven't enjoyed trading this one quite as much. I can't even remember when I got into it here on the initial breakout, but once we got up to the top of the range and started correcting, I drew this fib retracement tool and I got out when we broke below the 50% the first time. So again, didn't maximize my profits on this move, but still got a decent chunk out of this initial run up. And I was just watching it underneath these levels, and it seemed like it couldn't break out above the 50%. And once it did here, and we had a wick back down and broke back above, I thought, oh, I'll give it a try, and caught a little bit of this move, and then sold out of it. And it's just been a bit weaker since, but we are finding some support here. There was also this downtrending resistance line that we broke through and then kind of back tested and had a little bit of a bounce away at the end of last week. So I'm watching this one, but overall the price action is just a little funkier and not quite as strong as it is on ASST that we just looked at. Now, if we go over to Naka, or formerly KDLY, this one has been quite strong indeed, but it was one I played with caution because after this initial pump up, we had a massive retracement and then found support at seemingly kind of a random level here and another massive move up, but we haven't been able to break these all-time highs from this first pump up on the 12th of May. And we're retracing and we're holding just a little bit below the 50%. So I'm trading cautiously with this one and I'm just watching it. This, you could have said, was a good entry because on the 4-hour, you are definitely oversold on the RSI. You have this downtrend here that faked out once and then broke through, but the price has just come off of it after that. So this one to me has some proving to do. Again, if you are playing these, even the weaker ones can have decent sized bounces, but just look for those trend breakouts, those oversold conditions on the RSI. Obviously, mean reversion can help you with that as well, but this one hasn't been quite as much my favorite trading vehicle. Okay, moving on to DeFi Development Corp. And this one was one that had a very weak looking chart, but had a pretty remarkable comeback and bounce this last week or two. And the reason I say it was a weak chart is because we had this massive run up, blow off top, and then just came back to pretty much our breakout zone and luckily found support at this last bit of consolidation. So that's where I'm drawing these fib levels right now, just for this last little bit of price action from the top to the correction low. And while this run up was impressive, and James posted about selling covered calls here, which I did with a couple contracts too, but I want to be able to sell out of these. You can see that we are finding resistance at that 50% level. We haven't formed a lower low yet, and you could argue that there is a bit of an underside support right here. We just need to see if we can bounce away from that next week. But this has a little bit of proving to do, although this overall move from the low here, which was at $13, to 33 was quite impressive, but our all-time highs, if you're considering that, that was 53. So one to watch this week. If this trend line breaks down next week, I would anticipate more of a correction, and then we need to see where support could step back in. If we're considering this maybe our local top, we can again draw another trend line. Oh, and look, we have this major support level here at $23. That aligns with the 50% level, so look for that potentially playing support if we correct a bit more next week. Okay, last one, which was one I got into last week, which is one of the newer treasury plays, which is K&W or No Labs. I think they're based in the Bay Area. Anyway, overnight on their announcement, we had this big spike up. The stock was at 49 cents, went up to $1.10, and then came back down to 75. I got in at about 82, and on that Friday, wrote it up to 160. I think I got out at like 167. It got up to 170 something. And I was just like, oh, you know what? That's an 80% gain in the day. I had thousands of shares of this. So it was a decent gain for the day. And wouldn't you know, over the weekend, it just rocketed up and opened at $3.91. Hindsight's always 20/20, but I'm like, oh, I should have held on to a few more shares. I just have 1,000 shares of this sitting, which I just was like, oh, I'm just going to keep this there to watch it and see what it can do. And later this week, we got all the way up to $5.30. So now I'm really kicking myself because that would have been a very nice trade over the period of a week and a very good profit. So I suppose the lesson there is maybe don't take 90% of your trade off the table and consider letting a little bit more run. I was just like, it's going into the weekend. These treasury plays are uncertain. So it was my risk management that kept me from making more on this one. If we draw a fib retracement, just let's say off of this swing low right here after the IPO, I added a little bit to my position just because we were into the 50% right here and we had other points where we bounced. So I like these kind of entries again because you can see where all these candles have interacted with the price action, and I got an entry very close to that $3 level, and I can set my stop order just below. So it's low risk, and I can see if this bounce is going to play again all the way up to that $5 range or maybe new all-time highs. But we just have to see what these can do. With all these treasury plays, again, be careful, manage your entries, position size, have a clear point of invalidation, like I'm talking about with the stop loss here, because you don't want to be left holding a bag, as these could drop to very low prices and you could be out a lot of money and they might not recover for weeks, months, ever. So be careful and have fun, because there is a lot of opportunity out there. You just need to know how to position and manage risk, and you're not going to catch all the moves. So look for the higher confidence setups in these. Okay, so that's it for the charts. I hope that was a helpful look at some more of the crypto names, the Bitcoin treasury plays. Be careful out there. Keep your head out the window, especially next week as we see what happens with the Middle East tensions. On Wednesday, as we see what happens with CPI, I think those couple of events are really going to dictate which way the market heads. And I don't think there's going to be a slowdown in volatility. So like I said, position accordingly, have your stops in play, your risk management, all that good stuff. I hope you guys have a wonderful weekend, and I'll see you on Monday. Bye for now.